Welcome to the Deep Dive. Today, we are pulling back the curtain on the latest financial story from Oracle. We're talking about their fiscal year 2025 fourth quarter results, which just wrapped up, and also taking a look at their full year performance.
And we're working straight from the source material here. We've got the official press release, all the numbers, plus some really key excerpts from the earnings call. That's where you get the real flavor. Hearing directly from the CEO, Safra Catz, and Larry Ellison, the CTO.
Exactly. And our mission here is, well, to cut through the noise and figure out what these numbers actually mean for you. We want to unpack how Oracle's doing, see what's really driving the growth, especially now, and get a sense of what the leadership sees coming down the pike, particularly, in cloud and AI. We'll pull out the important bits.
Sounds good. Let's dive in.
Okay, let's start at the top. The main headline numbers. For Q4 of fiscal 25, ending May 31st, Oracle actually delivered results that were, well, better than expected.
That's right. Total revenue for the quarter, $15.9 billion, which is a pretty solid 11% jump compared to the same time last year. And that growth held up whether you look at it in US dollars or, in constant currency, adjusting for exchange rates.
And $15.9 billion.
Yeah.
That was above the forecasts.
Yeah, the analysts were generally looking for something closer to $15.58 billion. So a nice beat on the top line.
And it wasn't just sales. What about profitability? The earnings per share, the EPS?
The non-GAAP EPS for Q4 came in at $1.70.
Full non-GAAP meaning, just remind us.
Right, yeah. It basically strips out certain one-off charges or accounting things. It gives you a clearer view of the sort of ongoing operational profit.
Got it. So $1.70, how did that compare?
The street was expecting around $1.64. So again, a positive surprise there too. Beat expectations.
Okay, so a beat on both revenue and earnings for the quarter. What about the full fiscal year, FY 2025?
Yeah, looking at the whole year, total revenue hit $57.4 billion. That was up 8% in dollars, 9% in constant currency. And the full year non-GAAP EPS, 6.03 cents, also up 8% in dollars, 9% constant currency. So you see pretty consistent growth through the year, finishing strong in Q4.
Here's something I found interesting. Despite beating expectations, on both key metrics, the market reaction wasn't exactly explosive enthusiasm right away. The stock actually slipped a little bit, maybe 0.5% in after-hours trading.
Yeah, that's fascinating, isn't it? How the market reacts isn't always a direct reflection of the numbers. Beating estimates is definitely good news, fundamentally. But the stock price, well, it can be pushed around by lots of other things. Maybe the broader market was just having a rough day, or maybe some traders felt the stock had already run up a lot before the results came out. We saw some data suggesting it might have been in, quote, overbought territory.
Ah, okay.
So good numbers, yes, but the immediate market shrug was probably more about those external factors.
Okay, right. Now let's dig in because here's where it gets really interesting. When you look at where the growth is actually coming from, it's pretty clear, isn't it? It's the cloud business.
Oh, absolutely. No question. In Q4, Oracle's total cloud revenue, so that's combining infrastructure, IaaS, and applications, SaaS, that hit $6.7 billion. And that figure alone was up a very strong 27% year over year.
And it's really important to break that down because the growth rates within cloud are pretty different.
Hugely different. Cloud infrastructure, the IaaS part, the basic computing, storage, network stuff in the cloud, that hit $3.0 billion in Q4. And that segment, it grew an incredible 52% compared to last year. 52%.
Wow, okay. That's definitely the accelerator. What about the application side? SaaS?
Still growing, still significant, but more moderate. Cloud application revenue, the SaaS part, think ERP software, HR systems online, that grew 12% in Q4, reached $3.7 billion.
And within SaaS, specific apps did better.
Yeah, they highlighted some key ones. Fusion Cloud ERP, that was up 22% to hit $1 billion. And NetSuite Cloud ERP, which is big with smaller companies, that was up 18%, also hitting $1 billion.
And looking at the full year, FY 2025, does that pattern hold?
Pretty much, yeah. Total cloud services for the whole year, up 24% to $24.5 billion. But again, IA was really the engine. It grew 51% for the full year, reaching $10.2 billion. SaaS, meanwhile, was up 10% for the year to $14.3 billion. Still good growth, but clearly IaaS is where the hypergrowth is happening.
Okay, so that tells us about current revenue. But what about future business? You mentioned looking at remaining performance obligations, or RPO.
Exactly. RPO is a really key metric for understanding future momentum.
Just remind us what that means exactly.
Good question. Think of RPO as Oracle's backlog. It's the total dollar value of contracts they've already signed for services they still have to deliver. So it's not revenue yet, but it's committed business that will become revenue down the line.
So it's like a predictor of future growth. Business already in the bag.
Precisely. It shows you what's already locked in. And the Q4 RPO number was, well, it was pretty eye-popping.
Big.
$138 billion. Total RPO. And that's up a huge 41% from just a year ago.
41% growth in the backlog. That's massive.
It really is. And even more telling, if you look just at the RPO specifically for cloud services, that grew even faster, up 56% year over year.
56%.
Yeah. So cloud RPO is now almost 80% of that total $138 billion figure. It tells you loud and clear that future growth is overwhelmingly cloud-driven. They also mentioned that about a third of that total RPO, around 32%, is expected to actually be recognized as revenue over the next 12 months.
Okay, so that gives them pretty good visibility for the next fiscal year, FY26.
Very strong visibility, yes.
All right, so we see this massive acceleration, especially in cloud infrastructure, IaaS. It's driving the current numbers. It's driving the backlog. Why? What's behind this? What did the executives say on the call?
Well, Safra Catz was incredibly bullish, just really confident. She said point blank that FY25 was good, but they believe FY26 will be even better. Why? Because she expects revenue growth rates will be dramatically higher.
Dramatically higher, okay.
She positioned Oracle Cloud Infrastructure, OCI, as the place to go. The destination, she called it, for anyone wanting AI workloads, database workloads, applications. And here's the kicker. She said supply is not meeting demand right now. They're actually having to schedule new customer deployments out into the future because they don't have enough capacity today.
Wow. Scheduling customers out. That really tells a story about demand.
Doesn't it? And Larry Ellison hammered that point home too, especially about infrastructure. He said OCI revenue growth is skyrocketing. So is demand. He kept saying demand outstrips supply. He used words like astronomical, insatiable.
Insatiable. You don't hear that every day.
You really don't. He even said companies are just asking for capacity wherever it is because they're struggling to find it anywhere. It paints a picture of real urgency out there.
And a big part of this demand surge is tied to AI, right? Particularly around their database.
Absolutely. Larry made a very direct statement. Oracle will be the #1 cloud database company. That's the goal.
And the Oracle database, I mean, that's where a huge amount of the world's important business data already lives, isn't it?
Exactly. It's their historical stronghold. And now they've introduced something called Oracle 23 AI, which is what they call a vector database.
Okay, vector database. What does that mean in simple terms?
Think of it as a database purpose-built for AI. AI models, especially these large language models like ChatGPT, work with complex numerical representations of data called vectors. A vector database is just really, really good at storing and searching those vectors efficiently.
So it's optimized for AI tasks. What's Oracle's specific angle with 23 AI?
Larry described it as an AI data platform. The key thing they're emphasizing is its ability to let companies use popular LLMs, he named OpenAI, xAI, Google, Meta's Llama, to analyze all of the company's own internal private data. They're sensitive stuff. But, and this is crucial, while keeping that data completely private and secure within the customer's own Oracle Cloud environment.
Right. So what's fascinating here is the private data aspect. Most big AI models are trained on, the public internet. But businesses want to use AI on their own stuff, customer lists, sales data, research.
Exactly. That's where the real unique value is for a business, applying AI to your proprietary information. And Oracle is basically saying, we have the database where your valuable data already lives, and our 23 AI platform is the secure bridge to let you use the power of these new AI models on that private data.
That sounds like a potentially powerful position.
Larry certainly thinks so. He made a pretty bold claim. As use of AI increases, so will Oracle's database market share. He basically said nobody else is really doing this. This secure enabling of private enterprise data for popular AI models at scale.
And he had an example about moving database revenue to the cloud.
Yeah, a really vivid one. He said, look, if we just move $10 billion of our existing database support revenue, the money customers pay us now for on-premise database support.
Yeah.
If we move that to the cloud, it could easily become $50 billion or more in cloud revenue.
$50 billion. How does that match work?
Because when you move a database to the cloud, you don't just pay for the database service. You also pay Oracle for all the computing power, the networking, the storage needed to run it in their cloud. So that $10 billion support contract morphs into a much larger cloud consumption contract.
Yeah.
AI is the catalyst pushing customers to make that move.
Okay, that's a huge potential uplift. And they also talked about making it easier for customers to adopt, even if they use other clouds, multi-cloud and cloud at customer.
Yep, those are key strategies for broadening their reach. Multi-cloud database revenue, that's Oracle's database running on AWS or Google Cloud or Azure, that grew an astonishing 115% just between Q3 and Q4, quarter over quarter. And they expect that triple-digit multi-cloud revenue growth to continue in FY26. To make it happen, they've got 23 of these multi-cloud data centers live now, working with partners, and they're building another 47 in the next year.
And cloud at customer. That's where they put their cloud in the customer's building.
Essentially, yeah. It's for customers who, for regulatory reasons or data sovereignty, need the hardware on their own premises. That business also grew really fast, up 104% year over year. They have 29 of those dedicated setups live, and another 30 are being built in FY26.
So these strategies basically give customers flexibility. They don't have to go all in on OCI immediately.
Exactly. It lowers the barrier. You can use Oracle database tech where you are today, whether that's another cloud or your own data center, making the migration path much smoother.
Okay, so infrastructure and database are clearly booming. Let's quickly touch on the application side again. Strategic SaaS growth was around 20%.
Right. And Soper's point there was that these apps, like Fusion ERP and NetSuite, are becoming more attractive because the cloud versions are getting infused with AI. She mentioned advanced agentics and AI capabilities that help automate tasks and improve efficiency. The pitch is, move off your old on-premise system to our cloud apps, and you can do more and spend a lot less. That's a strong argument.
And Larry focused on the integration aspect of their application suites.
Yeah, he emphasized the value of having everything work together: ERP, supply chain, HR, customer stuff, even industry-specific apps for health or banking. His argument is that buying best-of-breed apps from different vendors sounds good, but then you spend a fortune trying to stitch them together.
The integration headache.
Exactly. Oracle's pitch is, it's all Oracle, designed as a single suite, it just works. This eliminates integration costs and complexity. And he suggested they're winning customers from competitors who haven't managed that cloud transition or integration piece as smoothly.
He also linked this back to the whole full stack idea, Oracle controlling everything from apps down to the silicon.
Right. It's a point they make often. The idea is that because they build the applications, they learn how to make the database better. Because they built the autonomous database, which uses AI to manage itself, they learned how to make their cloud infrastructure more reliable and scalable, reducing human error.
So innovation can happen at any layer.
That's the argument. Whether it's optimizing the network, the hardware, the OS, or the database itself, they can fine-tune the whole stack to deliver something that's ultimately faster, cheaper, and more reliable as an integrated package. Competitors focus only on apps or only on infrastructure can't easily do that.
Okay. Now, all this talk of insatiable demand, building out OCI,
Yeah.
it leads directly to the money they're spending, capital expenditures, CapEx. That number really jumped.
It really did. For the full fiscal year 2025, Oracle's CapEx hit $21.2 billion.
$21.2 billion, compared to what the year before?
FY 2024 was $6.8 billion. So yeah, a massive increase, more than triple.
Goodness. And Q4 alone was $9.1 billion. So where's all that money going? Is it just building giant buildings?
According to Safra Catz, no. She was very clear. The vast majority is for revenue-generating equipment. Stuff that goes into the data centers. Not the land or the buildings themselves, mostly. It's about filling out data centers, buying components. So servers, networking gear, the specialized hardware needed for all that cloud capacity.
And she explicitly tied this spending directly to the demand. Right?
Absolutely. She
Yeah.
said flat out, we don't build unless we've got orders for our capacity.
Yeah.
So this huge jump in spending is purely to match demand. The demand reflected in that massive RPO number we talked about.
So they're building to the orders they already have.
That's the message. And Larry added they're also making big engineering investments within that CapEx, particularly on the networking side, to make it faster, more reliable, and cheaper to run.
And the crucial question for AI, can they get the chips? The GPUs?
Larry addressed that directly. He said they are not having any trouble getting GPUs right now, which is obviously key if you're building out AI infrastructure.
Okay. And looking forward to FY 2026, what's the plan for spending? Even more.
The guidance for FY26 CapEx is over $25 billion.
Over $25 billion.
And Safra even added a little note saying she expects that figure might turn out to be understated.
Wow. So potentially even higher. That really underscores the scale of this build-out.
It absolutely does. They are betting big on this capacity expansion.
Which brings us neatly to the overall outlook. The guidance and the vision for fiscal year 2026 and beyond based on these results and that CapEx plan, it sounds like they're forecasting a major acceleration.
They really are. They significantly raised their guidance for FY26. Total revenue is now expected to be at least $67 billion.
$67 billion, what kind of growth is that?
That represents about 16% growth in constant currency. And importantly, that $67 billion figure is over $1 billion higher than the guidance they had previously given for FY26 just a quarter ago.
So raising the target. And the cloud growth within that is expected to be even faster.
Much faster. Total cloud revenue, they're now projecting, will grow over 40% in constant currency in FY27.
Over 40%. That's up from 24% growth this past year.
Exactly, a huge acceleration. And the cloud infrastructure part, IaaS, is expected to grow over 70%.
Over 70% for IaaS, up from 51% this year. That's really moving.
It is. That infrastructure piece is clearly the engine driving these higher overall forecasts.
And the RPO, the backlog, supports this kind of future growth.
Apparently so. They projected that RPO itself is likely to grow more than 100% in FY26, doubling the backlog again.
Doubling the backlog, goodness.
Safra sounded extremely confident about where this is all heading. She said Oracle is well on its way to being not just the biggest cloud application company, but also one of the world's largest cloud infrastructure companies. She even went further, saying she expects they'll beat the targets they previously set for FY27, and they're even more confident about hitting or exceeding their goals for FY 2029. That's looking way out.
And Larry's vision, still aiming for #1 everywhere.
Pretty much. He reiterated the goal. #1 in cloud database, #1 in cloud applications, and also #1 in actually building and operating the data centers themselves. He claimed they'll build more capacity than all of our cloud infrastructure competitors combined. Very ambitious.
Okay, and just quickly, the specific guidance for the next quarter, Q1 of FY26.
Yeah, for the immediate next quarter, they see total revenue growing 11-13% in constant currency, total cloud revenue up 26-30%, and non-GAAP EPS between $1.44 and $1.48 constant currency. So, a solid start building towards that bigger acceleration expected later in the year.
Right. And it's probably worth just briefly mentioning, they did nod to the usual risks, didn't they? Things like supply chain hiccups for all that equipment.
Yeah, the standard stuff. Intense competition, obviously, in cloud,
Right.
broader economic wobbles, regulatory changes around data privacy, and just the sheer speed of tech change you have to keep up with. Those are always factors.
Okay, so wrapping this up, what does this all mean for you, the listener? Trying to get a clear picture quickly. Let's recap the main takeaways.
Well, first off, strong financial results, beating expectations, that's the baseline. But the real story, the big driver, is this major acceleration in their cloud business, especially cloud infrastructure, IaaS. That's booming.
And this boom is being fueled by massive demand, a lot of it directly tied to AI needs. Oracle's betting heavily on its database and OCI as the secure place for businesses to use AI on their own private data.
Right. And their strategies like multi-cloud and cloud at customer are helping them win business across different environments. They're also playing to their strengths in integrated applications and having that full tech stack.
And maybe the biggest signal.
Yeah.
They are putting huge amounts of money, unprecedented, billions into building data center capacity. They're not just talking about growth. They're investing heavily to make it happen based on the demand they say is already there.
Yeah, all the signs point to Oracle feeling very confident. They believe they're really positioned now to be a top-tier player in cloud infrastructure, alongside their traditional app strength, really riding that AI wave.
Which leaves us with a final thought for you to chew on, something to consider based on all this. Given Oracle's massive CapEx commitment, over $21 billion last year, projecting over $25 billion this year, just for data centers, and their executives calling demand insatiable, what does that sheer scale of investment tell us about the true underlying global need for AI infrastructure right now? And maybe more interestingly, how might this kind of massive build-out by a company like Oracle reshape the whole competitive landscape in the cloud industry over the next few years? Who wins? Who loses? Does the pie just get bigger for everyone?
Definitely a lot to think about there. The scale is just immense.
It really is. Well, thanks for joining us for this deep dive into Oracle's latest results.